You mentioned Washington, D.C., and it got me thinking about the first time I was out there. It was a trip with the Boy Scouts, and we all know the motto of the Boy Scouts is be prepared. And that's what we want the people out there, the listeners and the viewers, to do when it comes to their retirement, be prepared, even if we don't necessarily know what is coming. Case in point, the stock market. It's been on a great run lately, and the fact that it's being fueled by just a handful of stocks being dubbed the Magnificent Seven, it has some investors concerned that there's a major correction coming around the corner. So I have to wonder, guys, do you agree with this? And since we talk so often about the perils of trying to time the market, how do you navigate a correction without trying to do just that?
I think that's a great question. Is a market correction coming? And the easy answer to that is yes.
Sure,
right?
sure.
The question really becomes, when is that going to happen? And, if you look at it and we look at things, I would say when I look at an election year, the first thing is you can use history as a guideline. We've got traditionally in an election year, you have historically speaking, pretty strong market performance. And, it really kind of makes sense in an election year why you could have strong market performance. In fact, you've got the positive bias, and that's the bias that the market in the current, incumbent administration wants to do anything they can to boost the economic indicators leading up to the election. So, they're going to throw everything they can, including the kitchen sink at this economy, to keep it healthy. Now, with that being said, one of the things about the stock market is there's sometimes unknowns, and unknowns can change things in a hurry overall with the market. So, a war, a terrorism attack, something that the market didn't plan for is an area where it could change things in a hurry. With that, it is also normal, though, to expect volatility. We've seen the market for the last several months really go pretty much kind of straight up, maybe a little bit of a breather here and there. But overall, we've got this strong run-up in the market. It would not be surprising for me if we saw volatility, kind of increase due to the uncertainty surrounding the, who's going to be the president.
Right, exactly.
If you look at the results, and I was looking at the conference last week, depending upon what poll you take a look at, it's pretty much split dead even. They're kind of neck and neck. So it really could come down to the wire. And, that uncertainty could create volatility within the market. So volatility can create opportunity. So again, it's a matter of how you're going to be able to take advantage of the volatility in the market. A lot of times people use volatility to get concerned and worry. We want you to change that volatility into opportunity. Then you want to start getting prepared for kind of the post-election rally or, correction. The stock market can vary different times based upon what's called a relief rally. It could also, go into more uncertainty after the election. Using that historical data and using, the bias of what, the Republican Party versus the Democratic Party and the policy impact can also help you start to think about what type of investments to position your portfolio after the election. So here's a couple of things in summing that up. Number one is, I think unless there's something uncertain happens, we're probably going to have a little bit of volatility leading up to the elections, but I generally think that the odds are in favor of a strong market this year, again, unless something unexpected happens. How you're going to apply that to your situation is right now, what you want to do is you want to, number one, look at rebalancing your portfolio. With the strong run-up of stocks, thinking of buy low, sell high, you could take some of your winnings off and rebalance maybe back to your bond portfolio. So keep your portfolio rebalanced. When you have these periods of times where you have equities run up a lot faster than bonds, that's an area where maybe you want to consider rebalancing your portfolio. Get it back in line with what your 60-40, 70-30, 50-50, objective is of the portfolio. Number two, they talk about the Magnificent Seven, and that's the fact that, 7 stocks have been driving the lion's share of the performance of the market over the last year. And to me, that kind of reminds me a little bit of the tech wreck of the 2000 era.
Sure.
And that's where somebody thought they were diversified because they had a lot of different investments. And ultimately, at the end of the day, what happened in the technology bubble blow up that happened in that 2000 environment is people weren't really diversified. They owned a lot of the same thing. Now, I'm not saying anything negative about the Magnificent Seven. In fact, some of those stocks are stocks that are in our portfolios. So What I am saying is that when you have such a large concentration in only 7 stocks, because those 7 stocks, when you look at the weight of the total market of like the S&P or the NASDAQ, they represent a very large percentage. So the results of your portfolio, if you're invested in like an index fund like the S&P 500 or the NASDAQ, a lot of the performance is going to come based upon the results of those. And if those stocks ultimately get into a sell-off mode, it could have a big negative impact. So the strategy number 2 is to take a look at maybe what is considered an equal weighting of your portfolio versus a market weight. And what an equal weight is that's allowing you to kind of spread out and bring back down the total allocation to some of those investments that could have got a little bit higher in the portfolio. Number 3 is if you haven't taken a look at what is called a buffered ETFs, if you want to have equity exposure, but you want to have a little bit of some downside protection, the buffered ETFs are a way to be able to add in a little bit of more peace of mind in your portfolio. Sure. It allows you to participate up to a certain cap level gain in the market, but allows you to offset a percentage. It could be 10 or 15 or 20% of the downside if the underlying index is negative over a period of time, say like 1 year. Buffered ETFs can allow you to be in a position to kind of hedge your bet a little bit there. Number 4 is to add in what we would call circuit breakers. So circuit breakers are predetermined exit strategies. So if you got hurt and didn't feel really good about what happened when COVID happened, or 2008, or the last time the market had a real big sell-off, and you said, I don't really have a circuit breaker or a strategy to exit the market while the market is close to or at an all-time record high, talk to us about the circuit breaker technology. We can, talk to you about it on your 401k, your different investment accounts. We can show you how that works. And the 4th thing that I'm going to talk to you about is looking at knowing what you own. Mm-hmm. If you know the investment methodology, you know the process that you own, it's going to help you weather the storm a little bit better than just not sure what you own in your portfolio. So again, what is the investment process that's going through picking out what you own? And if you understand that and if you love what you own, if there is volatility, which I expect, then that may create another buying opportunity, when there is a sell-off in the market, to be able to take advantage of buying some of the things that you love. And by doing so, you got to know what you own.
Nolan, I run across, a lot of the people that I refer over to you, and it's amazing to me that how many people have no idea what they own. And some people just shut down. A lot of times, and I don't want to direct this, but a lot of times it's the spouse that says, he handles all of that. I don't know anything about this. And I always tell them, because I know I've sat through many appointments with you, I always tell them, well, you need to know a little bit about this too. Maybe not as much, but you still have to have some sort of an idea. But like you said, with that 7, it's kind of like you don't want to put all of your eggs in one basket. You want to diversify. So there's a lot of things that you mentioned here that I go through with clients, and as I'm qualifying them for good referrals, it's amazing to me how many people really are uninformed on what they really have. And you mentioned circuit breakers. I hear this all the time. Well, my guy's not doing a whole lot for me because, man, when COVID hit, I lost a ton of money. There was no circuit breakers, obviously, in their portfolio. So, these are all great things that I think everybody should be aware of.
Yeah, buy and hope is not a strategy. Chris, I think really when it comes down to it, if you're a listener and you're thinking about, the worrisome of a market correction, you want to know, should you rebalance now? What is equal weight versus market weight? What are these buffer ETFs that we're talking about? How do I add circuit breakers on my account? And, what do I really want to own and what should I own? Give us a call. If you're one of the first 5 callers, call in and say you'd want an independent portfolio analysis. What we'll do is we'll put your information and we'll be able to give you a report that shows what your level of risk is. If the market sells off, how much your portfolio could go down in percentages or dollar figures. Is your portfolio constructed and optimized in a way to mathematically achieve the outcomes that you really want to do. Because again, while the market is high, you want to be thinking about, running that fire safety drill, having that in place. And that's exactly what we can do in that independent portfolio analysis. Again, if you're one of the first 5 callers calling in talking about market corrections.
And that number is 419-794-3030. Before we started recording today, we jokingly said, is a market correction coming? Yes. And truth be told, that is a very legitimate answer. When is it coming? How often is it going to come over the course of your retirement, and how is it going to affect you? That is where the details come into play, and that is what is critical for you to know. A great place to start is with this independent portfolio analysis. Be one of the first 5 callers right now. The team at America's Retirement Headquarters be happy to put that together for you. 419-794-3030.